Hello and welcome back to the channel. In this video, I'm going to show you how you can use the Graham formula in order to calculate the intrinsic value of a company. So without further wasting time, let's head to the Excel where I have already written the values, and the formula in order to calculate the intrinsic value is EPS into 8.5 plus 2G into 4.4 by Y. So what are all these values? V is the intrinsic value of a company, EPS is earning per share, and if you're not sure about the earning per share or you're confused about this, I've already made a video about this, so you can click on the link in order to find more information and how you can calculate this value. 8.5 is a fixed value for non-growth companies, and G is the growth rate for any company for coming 5 to 7 years, and 4.4 is the average yield of a AAA corporate bond, and Y is the crunch yield of AAA corporate bond. I'm going to show you where you can find all those values, and in this example I'm going to use a very well-known stock, which is the Apple. The ticker symbol is AAAPL, and in order to calculate the EPS, what is the EPS of Apple right now, we can go to the Yahoo Finance, and as I can see, the EPS of the company is right now is sitting at around 5.89. So I'm just gonna go ahead and put the EPS here, which is 5.89. I have just used comma instead of point because I have this German version of Excel which I cannot change, and you can please feel free to use 5.89 instead of 5.89. As I said, this is a fixed value in formula 8.50, and the next thing we need to know is the growth rate for the company for 5 to 7 years. And similarly, we're going back to the Yahoo Finance, and if we head to the analysis, you will see that at the bottom you can see what is the growth estimate for any company, and for Apple for the next 5 years the expected growth rate for the company is 8.13. and as you can see, this value also can change because for the past 5 years the company grows by 21%, and for the next 5 years the analysts are a bit bearish as compared to previous 5 years, and they have estimated this could grow up to on average 8.13. So we can go back and write here 8.13 and 2G. As we said, this is a constant here in the formula. And next, AAA corporate bond also fixed 4.40 value. And with this value for the crunch yield AAA corporate bond, we can go to the Google here and we can write here AAA crunch yield AAA corporate bond. Just to make sure you are using the current and most updated version. Here we have this Federal Reserve Bank of St. Louis, and here we can see that this value changed also very abruptly. For example, in 1981 this value was the highest of around 15, and as you can see it has been going down since that, and this reaches the least value of around 2.25 in year 2020. Since then this has been going up, and as you can see currently for 2023 in February this value is sitting at around 4.56. so we can go ahead back here and we can just say 4.56, and this gives us the intrinsic value. So here I have used all the formula. EPS, we have taken this D18 column, we can multiply later with this, and D19, then we use the similar formula. You can put this into the Excel and you will get the intrinsic value of a company. So according to Graham valuation, this the stock price of the Apple share currently should be sitting at around 140. And what we see here, how we can calculate so the current price in order to see if this stock is a buy or sell depending upon our situation and our margin of safety. And what we can see here that the current price of Apple is sitting at around 148.50. so we can just click 148.50. And if we see the difference is around 5% from 140 to 148. And what is the margin of safety? So the margin of safety you can use for yourself. You can either take 10% of margin safety. Let's say if the value is you want to buy the price or the stock of a company less than 10% its original value, so you would put here the margin of safety 10%. So if you put 10% margin of safety, the acceptable price you want to buy is around 126. Our logic here that if this value is greater than this, it will tell you buy or sell. So currently your acceptable price is 126 and the current price is sitting at around 148. So the formula is telling you to sell this stock and you should not buy, because this is not where the price is. So for example, let's say if the price goes up to 126, you will see that now this changes back to buy, because your acceptable price is also 126. So I'm just going to put it back, the original price 148, and this formula tells you that if the current price is less than the acceptable price, it will tell you to buy, otherwise it will say sell. So that's one thing. But what it has been seen previously for the lot of stocks, that the formula used previously for Graham valuation was not correct, and there has been some modification made in order to see the real value or the real valuation of a company. And in this case, the valuation they have made is they have changed the value of the constant 8.5 to 7 and the 2 into 1. The rest of the formula stays same. And if we look further, or if we see what would be the case here, I have already put the EPS 5.89, we have P growth 8.50, which we need to change to 7 here. And now we also have a growth rate which is also 8.13, which we already have taken from Yahoo Finance. Instead of 2G, we have value 1 here according to the formula. Here we have 4.40 and crunch yield 4.56. So what you see here now, that if by using the same formula for all these value, you see by now the value of the intrinsic price of the company has gone much below than 140. So now it's only sitting at $85. So what is going on? So this value is really dependent on what is the crunch yield of AAA corporate bond. And as you see in your previously, that this crunch yield has gone up by a lot of number, and previously this was sitting at 2.3 in, let's say, in October 2020. So even if we use 2.2 here for, if we say want to buy the stock in 2020, you will see that now the price has gone double even with the correction value. So the corporate yield bond is a very important factor when it comes to investing in stock. And currently, because of all those inflation and everything happening around the stock market, the crunch yield, people are more buying the bonds instead of stock. And this value is sitting at 4.56, which making stock as not the most, let's say the most return of investment would be much lower as compared to bond. And that's why people have been investing a lot in bonds, and the price of stock is going lower in last 2 years. So what you see here now, that now the intrinsic value has changed, $85, and current value sitting at 148%. The current price of Apple is now at around 148, and the difference between current price and intrinsic value is around 72%. And even say if you say margin safety 10%, you want to buy this stock at $77, which is far away from what is the current price. So definitely this will tell you to sell the stock, or you should not buy stock. So this is the Graham evaluation, and how you can calculate two different valuation. One is the original one and one is the corrected version. And by using these two, you can try any stock, and you just have to change the EPS and also the current yield bond and what is the growth rate of the company. I hope this was a useful video and you have enjoyed this and you have learned something new and how you can calculate the intrinsic value of a company. If you need this Excel sheet, please leave me an email on my investvithadnan@gmail.com and I will send you back. I wish you a good day and I will see you in the next one.